Hello and welcome to another update video about silver. Just a quick update really because I wanted to make you aware of one important aspect here on the chart that is really highly relevant. So in the last video I told you that we are probably going to land somewhere in this area here in green based on the assumption that what silver is currently doing, this is an Elliott wave count, it is currently doing an ABC correction. We are currently in the C wave and we are in a wave 2. So ABC is part of the wave 2. A wave 2 in the silver market usually comes down into the region between the 88.7% and the 61.8% Fibonacci retracement level, which means between $13.71 and $18.63. We are currently, however, at a point where obviously this is not guaranteed to work out. This is an assumption based on what silver has done in the past, is usually doing, because when a market has adopted a certain behavior, it usually continues to follow it in terms of the retracements. Let's take a look at this previous wave one, which was a very similar one, just larger, and here you can see how similar these two, let's call them fractals, actually are. See, this was also a wave 1 of a higher degree and a wave 2 to the downside, and we currently do the same thing again. A wave 1 to the upside and a wave 2. However, from a higher level point of view, and I explained it in the last video very well, I think, or in more detail at least, we moved up here in a wave 1, we came down in a 2, finished off this correction in 2015, 2016. We then moved up, moved down again. No, sorry, we finished it off here in March 2020. So this was actually a wave 1 and this wave 2 lasting all the way into March 2020. We then started a larger wave 3, the same wave degree as this wave 1 here in white and the wave 2 down there in March 2020. Then started a wave 3, and within that wave 3 we are currently here creating another 1-2 pattern. But can you see actually how similar these fractals are? Because you can identify here an impulse and a correction down. It looks very similar. Especially here, we're currently basically before we were here, and now we are basically here, sort of. So this is where we are basically now. On this way down. So just to show you really how these fractals work out, and from an Elliott wave point of view this makes sense because it is the same wave count, it's just a lower wave degree. And if you can see what we did in this higher level wave count, we pulled all the way down here, first of all close to the 88.7% fib level, didn't quite touch it, which is always a signal that we might come down to it once more, because we never really reacted to it. And you can see in the end we came down, just found support here at the 88.7% level in March 2020 and then started to move up here in another impulse, which then completed the correction. Now we have the same situation. Based on that, we would expect silver to come down to $13.71. That is the 88.7% fib level. Going below that, I don't think so, but this is certainly what we have to assume sort of in the worst case. How long that takes, I can't tell you. See how long the last correction took, even though this was a wave of the higher degree. But it started obviously in 2011 and ended in 2020. I mean, this is a lower wave degree, but there's nothing telling us this couldn't take a couple of years, unfortunately. Which would be a great accumulation phase, but unfortunately, this means that we will not see higher silver prices soon. Now there is one exit possibility, one exit on the motorway left for silver, and that is exactly what I want to show you now in this video. There's one more point where it could turn around, and that is exactly now. And why is that so? By the way, before we talk about that, within this green area, for everybody who thinks this is too large, I identified yesterday a target range that is a bit more specific and based on the lower level wave count. That means in this whole range, the range between $15.50 and $16.80 has a higher chance to be the low for silver. Okay, so however, there's one more exit on the motorway for silver, And this is exactly where we currently are here at $19. Why is that so? So if we zoom out again, maybe to the daily chart, and we take those fib levels out, you can identify a very, very important resistance or support area exactly here. It's an area where here was an area of trade, here we had resistance, here and here. Yeah. If I zoom out a bit more, was that relevant before? Yeah. So here as well, important, here support. Yeah, this is very, and here the could argue if this was resistance here, it certainly didn't push through it substantially. And here as well. I mean, prices are dynamic, yeah, so it's not one specific price point, but can you see how this level always played a role? The $19 level. And this is exactly where we are now. That's currently why we are stopping there as well. There's one more chance for it to turn around here, and then it wouldn't look so bad. But honestly, if we drop below this level, then I think we are going to see prices here in this region around that green box, in the green box. Yeah, anywhere in the green box from the current point of view, we could turn around. But more specifically here within the smaller one, okay, where I gave you the target level. So keep an eye on that for you here for silver. In my opinion, at the moment, yeah, buying now would be like catching a falling knife. Going back into silver, I'm currently waiting. I'll probably buy either if we get here close to the 88.7% fib level and I see then an impulse to the upside emerging. But that's what I want to see. So I want to see first an impulsive wave structure emerging to the upside. Something like, let's see, we come down a bit lower, and then from here we start moving up in an impulsive wave on a lower time frame. Yeah, not necessarily that high, but on a lower time frame, I want to see a 5-wave move and then a 3-wave move down based on the Elliott wave method. That would tell me that we have turned around in the trend. Yeah, at the moment the impulses are going down. What I want is the impulses to go back to the upside, which it would indicate that the higher level trend has changed from a downtrend into an uptrend. Now, a 5-wave move to the upside not necessarily is a confirmation. Best is to wait for a 5-wave move up, a 3-wave move down, making a higher low. That would then be a good indication to tell me at least that the low was already in. But this might require some patience. I'll definitely keep an eye on the silver market for you. Looking at it from a broader economic perspective, this also makes sense because, you know, we see the economy getting weaker and weaker. Silver in itself is not necessarily an inflation protection. I mean, we can see the proof at the moment. It is a metal, or it is it's a precious metal that is actually used in the industry, heavily in the industry. And if the industry is obviously slowing down, this also has an effect on prices. Yeah, this is definitely one factor here. And again, proof that a lot of the correlations that were always let's say postulated, like inflation and gold. Yeah, so the higher the inflation, the higher the gold price. These correlations are currently breaking up. Silver as well. Silver and inflation. This is what a lot of people are saying, that this is tied together. It's not. The correlations come and go, and that's what I always try to communicate. You know, there's no reason to really look for correlations because these always come and go. And therefore it's best to analyze each price chart individually. In my opinion, with the Elliott wave method is the best method to identify trend reversals. Okay, so hopefully you liked the update. If you did, please hit the like button, leave a comment and subscribe, and I hope I'll see you in the next video. Bye bye.